In an interview on a CBS show, U.S. Treasury Secretary Yellen said that the U.S. employment growth rate has dropped to its lowest level in 2.5 years. This could mean that job growth in the labor market will slow down, or even that a recession could happen. But she also said that when interest rates are high, it's normal for the economy to grow more slowly. Two senior economists at the Federal Reserve, Peres Orev and Yannick Timmer, recently put out a report in which they said that the Fed's continued interest rate hikes have caused a banking problem. But the Fed and U.S. Treasury's efforts to hide the problem and keep it out of the news with bailout programs have not fixed the problem. The U.S. banking crisis and debt problem are still going on, and the institutional bond market is still having trouble. The study also says that high interest rates could cause a disaster in the U.S. financial and bond markets, and that many struggling U.S. companies could go bankrupt. Based on their research, more than 37% of non-financial U.S. companies are already in financial trouble. This means that these companies are close to defaulting on their debts, which is the highest level since the 1970s. The number of U.S. 10-year Treasury notes that hedge funds are short has reached its highest level since July 2019. The U.S. Commodity Futures Trading Commission reported that a net amount of money left the U.S. bond market in the week ended July 9th. Even more money has left the country in the past 4 weeks, $356 billion. The selling of U.S. debt by investors around the world is likely to get worse, and central banks around the world are also moving away from or cutting back on their sales of U.S. debt. The U.S. Treasury Department says that as of July 6th, central banks around the world had sold $8.991 billion worth of U.S. Treasuries. According to the International Capital Flows Report, which came out on June 16th, central banks around the world held a total of $7.58 trillion in U.S. Treasuries as of early May. This is less than the $7.66 trillion they held a year earlier. However, since 2008, the total amount of U.S. debt that central banks around the world own has not increased in line with the size of the numerous rounds of quantitative easing that the U.S. has conducted. Instead, global central banks quickly switched from being the biggest buyers of U.S. debt to being the biggest sellers. Also, the trend of buying gold and the faster sale of U.S. debt by central banks around the world are still going on. According to a report from the U.S. Treasury Department, U.S. economic partners like Saudi Arabia, Belgium, Luxembourg, Germany, France, and Israel have led the wave of U.S. bond sales in the first 4 months of the year. These countries sold at least $281 billion worth of U.S. paper, the most of any central bank in the world. China has also kept selling off U.S. debt at a faster rate. Its stocks of U.S. debt have dropped to a 13-year low of $868.9 billion. As of the beginning of May, China has been selling U.S. debt for 11 of the past 12 months. At its peak, China held $1.3167 trillion in U.S. debt. Since November 2013, China has sold $447.8 billion worth of U.S. debt, which is 33% less than it bought. In the last 24 months, China has sold off about 24% more of the U.S. debt it owns. Also, China has added to its gold reserves for 7 months in a row, which is different from how fast it has been selling off U.S. debt. By taking these steps, China and other big U.S. creditors, as well as central banks around the world, have shown that they no longer trust the dollar. They are getting rid of U.S. debt faster and replacing it with things that don't use dollars, like gold. This trend shows that central banks around the world want gold to play a bigger role in international financial transactions and as a reserve asset. Gold's ability to keep money stable is being recognized again, and it could become the anchor currency for global digital currencies, or SDR, special drawing rights countries once again. Countries like China, Russia, India, Brazil, and South Africa are working on a new trade settlement currency system backed by gold. They plan to make an official announcement at the Johannesburg conference in August. This plan would have nothing to do with the US dollar and could also be used by countries in the Eurasian Economic Union. The plan would use the decentralized nature of digital currencies to link the new trade currency to a wide range of goods and the interests of member countries. Gold is likely to be the only way to secure the new currency. This could become a new way to settle deals around the world that doesn't use the US dollar, or is similar to it. Gallup recently did a poll that shows that US investors like gold a lot, More than half of US respondents said that gold is a better long-term investment than stockpiling US dollars. This percentage is more than 3 times higher than what the 2018 study found, which shows a big change in how people in the United States feel about gold right now. The Saudi Central Bank is currently looking into the possibility of using a digital currency with gold backing to settle international transactions. Saudi Arabia is thinking about using the RMB as a listed currency for trading and buying gold in the second half of 2023, as well as directly turning some of the oil income it gets from selling oil in China into gold. The digital yuan is already used to pay for storage fees on the Dalian Commodity Exchange, where it is traded. The Saudi finance minister recently said that the country is looking into ways to sell oil in currencies other than the dollar. At the moment, Russia, Iran, India, and other countries are looking into using gold to trade oil. At the same time, Europe, Japan, and other countries with the most dollars abroad are also promoting oil trading and moving away from holding international reserve assets in dollars. In the oil trade, the rule "no dollar, no oil" was broken. Along with the dollar, a new global digital currency order could form if the move toward global digital currencies and the natural monetary properties of gold continue. This could be a big turning point for the petrodollar system. It is clear that this is a planned move to move away from the dollar. In this situation, when asked if China, Russia, Brazil, and India plan to make their own currencies, U.S. Treasury Secretary Yellen said that the dollar will continue to be the most important currency in international trade for the foreseeable future, and that there is no other currency that can replace it. She made it clear that the U.S. and its partners would do something to stop countries like China from doing these things. The U.S. banking system has had structural problems for a long time that haven't been fixed. If interest rates keep going up, this could lead to higher interest rates, which could hurt business and personal debt and cause a financial crisis and recession. Central banks around the world are selling U.S. debt and switching to non-U.S. dollar assets like gold. This shows that global trust in the U.S. dollar is not very strong, as creditors of the U.S., China, and other countries are selling U.S. debt faster and buying more gold. This demonstrates their desire to be less reliant on the U.S. dollar and their support for a new gold-backed trade settlement payment system. This is a big step toward making the global financial system more diverse and less dependent on the dollar. It will also help make the United States less powerful. The growth of digital currencies around the world also opens up new ways to make the monetary system more diverse. When you mix digital currencies with stable assets like gold, you can make global financial deals more stable and fairer. This new global digital currency order is supposed to make countries less reliant on the US dollar and give them more freedom and equal chances to take part. It will make the financial system more stable, encourage the US dollar to lose its value, and set up a new global monetary order based on gold and digital currencies. These are important steps that are being taken to lessen the effect of US control on the world economy and to encourage multipolarization and equal development. We're glad you watched this video. We care about what you think and feel, so please tell us in the area below.